Hey everybody, it's Braden here from Royal LePage Little Oak Realty, and welcome to my monthly-ish housing market update. Today we're going to be talking about June. We're right around mid-July here. Let's hop right into things. Prices dip for the third month straight. Inventory is still at decade highs in the Fraser Valley. Things are on the slower end. We are still technically in a buyer's market or maybe a weak balanced market. Let's hop right into some of the numbers right off the bat here. Month over month, new listings were down by 10%. Sales were up 2%. Inventory was basically flat. So it's not a great deal of change out there happening in the market right now. I will say normally at this time of year, we are heading into the summer market. Things tend to be a little bit slower. People tend not to want to list their homes in the summertime because they're out recreating, they're out kind of having fun. Also, we tend to have sales level off a little bit. And I'm not surprised to see inventory level off a little bit either. Now, as compared to the 10-year average, new listings up 8%, so kind of a moderate amount. Sales down by 38%, inventory up by 56%. So that sort of inventory demand, that supply-demand dynamic, we are still seeing that. Sales well below normal, inventory well above normal, but it is starting to ease a little bit. Sales were down, I think it was closer to 50% before, and inventory was up by closer to 60% or more before. So we are seeing things start to even out a little bit with respect to the 10-year average, and that could be a positive sign for the market moving forward. But it really remains to be seen. Taking a closer look, I picked out some important news stories here. So let's have a look. Inflation in Canada, it did tick up to 1.9% in June. There are some components of inflation which are a little bit worrying. You know, when they look at core inflation and they strip out some of the more volatile items, many of them are at or near 3%. Food being one of them. So I don't know if you're out at the grocery store, you're still noticing very high prices. I know I'm noticing that, and I'm hoping that food inflation kind of goes away soon. It's one of the things that sort of increases the cost of living for all of us, and it's certainly not fun. Because of inflation being up and core inflation still being high, it seems like the bank will likely hold at their next meeting. So we will, just based off of that alone, likely not see an interest rate cut coming up. Furthermore, the Canada jobs report, we added 83,000 jobs in June. It was way beyond expectation. I think the expectation was like 7,000 or 8,000 jobs or something like that. So 83,000. I mean, you can zoom into those numbers a little bit and it's not quite as rosy as it seems, but still, it's far more. And also the unemployment rate dropped to 6.9%. So again, this is lending credence to the prediction that we probably won't see an interest rate cut coming up here at the next meeting. Economic uncertainty still dogs the market. At least that is the message from my local real estate board. People are wondering if interest rates are going to fall more. Will we have American tariffs truly impact our market? That's another big question. It seems like they might. I know Donald Trump, I think, has threatened 35% tariffs on many different goods. I do think it's still bluffing and threatening us to try to get us to bend to his will. And whether or not we do, and whether or not we see real tariffs impact our trade relationship, I think that still remains to be seen. I'm a little doubtful myself personally. Anyways, thank you so much for hanging out with me and listening to my housing market update. I hope I catch you next time. Bye now.